Welcome to Sundaram Insights. Today, we explore the Sundaram Multi-Factor Fund, our latest NFO. Learn what inspired it, the gap it fills, and how it reflects Sundaram Mutual's legacy and vision for the future of investing.
Welcome to Sundaram Insights. Today, our Managing Director, Mr. Anand Radhakrishnan, shares what makes the new multi-factor fund a smarter, balanced approach to investing. Let's hear from him.
Hello, everyone. Good to join this conversation and update you on our new fund plan, Sundaram Multi-Factor Fund.
What was the inspiration behind launching the Sundaram Multi-Factor Fund at this point of time?
In the recent times, we have seen a slew of launches of passive funds, and along with it, we have seen rising doubts or skepticism of the ability of the actively managed funds to deliver consistent outperformance. The two issues that are held against active fund managers are: one, an inability to follow a well articulated investment approach and style consistently and over time. Second is getting trapped in their own biases and taking inordinate time to do the remedial steps to reset the portfolio to good health. What if we take these two issues squarely head on and find a solution? That is the idea behind multi-factor fund. In this fund, we attempt to, one, develop a set of rules that work over a period of time and that mimic the decision-making mental models of an active fund manager. It also follows this rules-based approach dispassionately over time, thereby avoiding various behavioral traps an active fund manager can get into. It takes a middle path between a passive and active management. The multi-factor fund aims to capture the best of both worlds. That is, consistently deliver the asset class returns and on top of it, deliver a moderate outperformance as well.
Moving on to the next question, how do you see factor investing evolving in India, and why is now the right time for investors to consider it?
Factor investing has been in India for some time as a subset of smart beta investing, but most of the solutions that are offered in the market center or veer around single factor models. There have been funds that are launched along the value paradigm. Then there are funds that follow momentum style. There are, in the recent times, we have seen launch of a quality fund or a growth fund, etc. Most of these fund strategies pivot around single factor and try to follow it consistently. But market is a summation of many things, and at some point of time, one factor may be dominant, but it doesn't remain dominant for a very long period of time. And hence, in the recent times, the mutual funds have explored the idea of bringing multiple factors together and launch a multi-factor fund. Again, the benefit of it is to combine the various pillars of investing and provide a more complete solution to investing. With some learning and adaptation, we expect some of these models to deliver robust performance to the investors.
So, what gap in the market is the fund aiming to fill?
The fund is aiming to fill few existing gaps. One, there has been proliferation of single factor models that don't deliver consistent performance. Hence, multi-factor models are pitched against single factor models very clearly. Second is, multi-factor models also try to mimic an active fund manager based on rule-based investing. A good investor follows a set of rules consistently over a period of time. But unfortunately, in real life, people fail to follow this set of rules consistently. By just making it a methodical and automatic set of rules, we try to diversify the behavioral risks of the fund manager in not following the set of rules consistently. Third, of course, is to develop a decision-making model that has more predictable outperformance over a period of time. So, combination of these three benefits are offered by the multi-factor fund.
So, how does this fund reflect Sundaram Mutual's overall philosophy or approach to wealth creation?
At Sundaram Mutual Fund, we aim to provide reliable investment solutions that work well over a period of time and stand the test of time. We also want to be very transparent and consistent in the approach that we follow. And third, we want to be flexible in our decision making process as well as balanced in executing those decisions. So, these three aspects, that is, trying to have products that stand the test of time, trying to be transparent and consistent, and trying to be flexible and balanced, are the three pillars which this fund will aim to replicate.
So there are already many equity funds and even some multi-factor strategies in the market. Why should investors choose Sundaram's offering?
Yes, there are few multi-factor funds that are already there in the market. Our understanding is Sundaram Multi-Factor Fund is a bit different from the existing ones. The key difference is we are not trying to develop a model that perfectly fits the past data. The idea is not to create a model that generates large amount of alpha with the benefit of hindsight. The idea is to have a model that is intuitively aligned to the decision making framework of a good investor and follows it consistently over a period of time. So, in that sense, it is not a fit to model is not fitted to the data in a 100% sense. Model is fitted to what are the right investment uh, decision making approach, and that way it is very different. It also the model also strikes the balance between active fund management and passive fund management. Like you all know, passive fund management blindly mimics the index and has 100% overlap with the index. An active fund manager has active ratio of 50 to 60% or even higher. In that sense, the overlap with the benchmark is in the 30s and 40s. This fund walks the middle way, the midway between the active and passive. So, in that sense, it is trying to provide the best of both worlds.
So what gives you the confidence that this model will work well across market cycles?
Sundaram multi-factor fund model is very intuitive and easy to understand for everyone. It is not a black hole model where people don't know what goes in and what comes out of it. In that sense, we kind of articulate what does quality stand for, which variable we are using in quality, what does growth stand for, how do we measure growth of companies, how do we measure value of companies, and what is momentum, size, etc. We upfront tell these are the 4 or 5 factors we use, and this is the variable that we use to explain that factors. We also tell broadly the range of weightages that are given to each of these factors. So, in that sense, it's a very, very transparent approach. Second is the model is not super automated. In that sense, there are no exotic or esoteric things like machine learning, AI, etc. These are simple decision making rules that are applied month after month, quarter after quarter, and try to mimic the real life decision making thing. So to that extent, being easy to understand and not having unexplainable processes behind it. In these two sense, the Sundaram Multi-Factor Fund is different from the other funds.
So what makes Sundaram Mutual uniquely positioned to run a product like this?
Over the years, we have not shied away from launching innovative products in the market. We've also not shied away from taking risks. It's always Sundaram Mutual always had an in-house capabilities to participate in the evolving nature of investment solutions, and to that sense, we would like to be one of the earlier fund management house to launch the smart beta or the quantitative model based investing. Simultaneously, we are also investing in expanding our capabilities and strengthening our team, investing in technologies that support this new wave of products. so as to boost our ability to sustainably offer products like this on an ongoing basis.
How does this fund cater to the needs of retail investors, especially those new to equity investing?
For retail investors, this fund provides clarity by A, moving away from single factor fund and adopting a holistic approach to investing through multi-factor fund. Second is, it also moves away from a non-transparent set of rules to a more transparent way of understanding how we make those investments. Third, it helps retail investor to diversify away from the risks that emanate from the biases of active fund managers. As we all know, many active fund managers have a lot of biases, and this fund aims to, because it is rule based and because it's periodic rebalanced, aims away from moving from this kind of biases. Fourth, it also cuts the noise away in the market. In the market, we have seen a lot of clutter and noise on what delivers outperformance. Some people say you got to invest in large cap, mid cap, small cap. Some say you got to invest in growth style investing or value style investing. And some others say you got to invest in this sector. This is an emerging sector. And all these kind of create some bit of a confusion at the retail investor's mind by providing them a very solid framework which cuts across multiple issues and bringing them together. We think this fund is ideally suited for any retail investor.
Many investors are still unsure about data driven strategies. How would you reassure them?
Yeah, the fund may not appeal to investors who do not uh, appreciate or cannot easily understand rules based mathematical models. But we are trying to kind of be transparent about it, educate investors on these rules, the simplicity of these rules, the intuitiveness of these rules, etc. And we have tried to eliminate the non transparent, the black hole kind of an approach, which is followed by some of the other fund management strategies in the market. And the combination of these two should provide some relief. Having said that, I'm sure it won't appeal to all the investors.
What kind of investors is this fund best suited for?
In this fund, we have tried to take the best decision models of fund managers and have converted that into a set of rules. In that sense, we have tried to replicate what kind of decisions, mental models that work over multiple cycles and have incorporated that. In that sense, the fund is suitable for any investor who wants to benefit from the best of the active fund management skills that are available. The fund is also suitable for investors who want to diversify their risks from an individual fund manager or individual style or a single factor based approach, etc. So, both this benefiting from the learnings of multiple active fund managers as well as the need to diversify the risks from single style, single approach is both are valid for this fund.
You've been part of the industry for decades. How does this fund align with the broader trends you've seen evolve in Indian asset management?
By launching this fund, we have taken a meaningful step towards being an innovator of investment solutions. Philosophically, it is taking the fight to the camp of passives. Instead of blindly mimicking a benchmark, the fund aims to smartly pick winning ideas and avoid laggards. It will be doing that by using good old data and good old analysis. It will try to avoid the market chatter, the noise, the expert opinions, and generally the overall clutter that is there in the market, and solely depend on numbers. In that sense, it's a very refreshing and a bold step towards value creation.
Thank you so much. So that was Anand Radhakrishnan on the vision and purpose behind the Sundaram Multi-Factor Fund. To know more, visit www.sundarammutual.com or speak to your financial advisor. Thanks for tuning in to Sundaram Insights. We'll be back soon with more perspectives that help you stay ahead of the curve.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.